Please welcome Jeremy.
We're getting closer to the day when we're going to get woken up by our Siri, Alexa, or Google Home saying, "Good morning, Jeremy. Here are your financial holdings for the day. Here are portfolio changes. You have a meeting at 2 p.m. Shall I order you the Uber? And by the way, your wife wants lasagna for dinner. Shall I order the ingredients?" Now, this interaction is very important to dissect because it's driven by a few things. First of which, voice, data, and digital banking. So where does blockchain fall in this equation? Good afternoon, everyone. My name is Jeremy. I'm the Chief Operating Officer and co-founder of Arival Bank, and I'm also the portfolio manager of Life.SREDA Venture Capital. Life.SREDA is one of the first fintech-only venture capital funds in Southeast Asia. We are based in Singapore and have been investing into fintechs for the last 6 years. We've invested into almost 25 companies. We've had 9 exits into some digital banks like Move-In, Simple, Fedor Bank from Germany, Rocket Bank as well. And about a year and a half ago, we started an internal venture called Arival. We're a digital banking startup for underbanked businesses across the world. And we've had some impressive milestones this last year and a half. Most recently, we won Best of Show at Finovate. It's like the Oscars of fintech in Hong Kong. And after that, we won at London Design Awards for our banking platform. And we also won at one of the biggest fintech conferences in the Baltics in Lithuania. So I want to start with the theme for today. These 4 individuals here have something very much in common called first principle design thinking. Some of the greatest inventions in history were driven by this concept. Basically, it's understanding history, predicting the future, and based on that, building something from scratch right now, today. For example, when Henry Ford created the first automobile in the US, he didn't say he wanted to create a faster horse. He understood that the future mobility was going to change, and based on that, he created something from scratch. Steve Jobs, he didn't say, "I want to create a better BlackBerry or Motorola Razr." He said, "I want to have a glass screen that you can touch. I want to have the email browser, the internet, and combine everything into this one innovative solution." When World War II ended, the British and the Americans came into Germany and stole this technology from Wernher von Braun to build the first rocket and ultimately bring the first people to the moon. But what Elon Musk said is that he wants to create it from scratch by using 3D printing and carbon fiber to build SpaceX. So let's start with part 1. How is the future of banking going to impact and be impacted by blockchain? I like to use this as an icebreaker. On the left, we have Jamie Morgan, the CEO of JP Morgan Chase, and on the right, we have the founders of Venmo, one of the hottest fintechs in the US that was acquired by PayPal. Now, I'm not going to stand here today and convince you why digital banking is the future, because it's already here. For the very first time in history, we have 4 generations of people in our workforce. So basically what that means is that their expectations are certainly different. And now digital banking is trying to solve their different needs through their solutions. Also, we have more hands in people's phones here in Asia and across the world than ever before. So now it's up to digital banks to adopt and adapt their technology and showcase their brand in a way that increases customer retention. In fact, 71% of millennials rather go to their dentist than go to their local banking branch. So certainly digital banking is here and it's here to stay. But before we can identify how blockchain is going to impact banking, we have to understand what the next generation bank will look like and who will it serve. So we identified the problem about a year and a half ago when our venture capital fund was approached by hundreds of different businesses coming to us with the same problem. We understood that businesses are underbanked across the world. So we're talking about blockchain startups, crypto-related businesses, freelancers, small to medium-sized businesses. And certainly we know that small to medium-sized businesses are the backbone of our economy. But right now, they're totally disconnected from the banking system. They're getting their accounts frozen, blocked, and bottom line, they're not having access to different products and tools they need to operate on a day-to-day level. We spent about 3 to 4 months of hardcore research to really understand how universal this problem is. Banks, whether it's in Australia, Thailand, Israel, or the US, are totally disconnecting these kinds of businesses. And we identified not just the blockchain sector as one of the biggest impacted sectors. We understood that SMEs, so for example in the US, 28 million small businesses exist, and the gig economy, the freelancing economy, is certainly on the rise as well. If we look at the digital banking landscape today, you can see how saturated and crowded it is on the bottom and on the bottom left side. That's because most of the digital banks coming about today are targeting retail customers. So where the real opportunity exists right now is on the top right. What digital banks are going to come about exclusively targeting these underbanked businesses? So that concludes part one. We can make an intellectual assumption that the future of banking belongs to crypto-related businesses, traditional SMEs, and freelancers. So let's talk about how blockchain can really change the future of banking. First and foremost, payments. Let's talk about that. If you want to send money from your Italian bank to a US-based bank, you would most likely need to use SWIFT in today's world. SWIFT processes about 24 million payment orders per day across 10,000 financial institutions. But the issue is that 60% of these payment orders require manual intervention that lasts anywhere from 15 to 20 minutes. So let's think about that for a second. SWIFT does not actually process the payments themselves, right? They just submit the payment orders, and there's 24 million of them every day. Now, 60% of these payment orders require manual intervention. How inefficient is that? For example, cross-border payments is one of the biggest revenue streams for banks, okay? 40% of transactional revenue is done by cross-border international payments. It's a huge, huge revenue generator, almost as big as mortgages for banks, and obviously working with bigger service enterprises like corporates. But the issue is right now that it's very non-affordable. It's very expensive. For example, the average money transfer fee will be about 7.8% when you take into account the wire fee, the exchange rate markup, so on and so forth. For a good use case is actually BitPesa. They're a blockchain-based cross-border company in Kenya and Africa. And they do about $10 million per month in these kind of transactions. But they've managed to get down the average fee in Kenya from 9% down to 2.5%. So they're a very, very good use case of how they're leveraging blockchain to create cross-border payments that's more effective, faster, and more affordable. We talked about how SWIFT is currently lagging right now. So when you look at different blockchain companies like Ripple, or IBM is building a similar solution called IBM WorldWire, where they're basically allowing you to process these kinds of payments and settle them within 30 seconds. Whereas the typical payment, international payment I should say, will be about anywhere from 1 to 2 days. Now, one of the other aspects where blockchain can really make an impact is the loan and credit game. Right now, banks are typically using inaccurate credit that's not secure and quite outdated. And the system is it's a centralized system. So that's the issue right now, is that blockchain can actually impact compliance where banks can make a much more sophisticated risk rating. Let's talk about compliance briefly. So we did a very hardcore analysis to understand why traditional compliance is no longer the future of banking. It's very old-fashioned, it's time-consuming, and it's costly. But the reason that these blockchain companies are underserved by banks is because, bottom line, these banks don't have the compliance procedures and onboarding policies in place to really onboard them. So what we've decided is that compliance needs to be 100% online and paperless. Only 5% of onboarding worldwide is done 100% online. So that means the remaining 95% of onboarding done by banks worldwide uses some sort of manual or paperwork as well process. And what we've identified is something called unified digital identities. We believe blockchain can create some sort of digital passports, if you will, for these kinds of businesses. So if we can onboard them and choose to onboard them, then we can create a digital passport for these kinds of businesses where they can use this unified identity to work with other banks different vendors, and different fintechs as well. And what this ultimately creates is a network effect. Because now, as the initial party, as the initial bank, we don't have to go there back and over and again to request new data. Because every time they use their digital passport with a different partner, it's automatically verified and updated in the system. This is more or less an overview of how traditional compliance works. And in each respective domain here, blockchain can certainly be implemented. The most three important elements of compliance today is customer, product, and geography. Basically who they are, what they want from you as the bank, and where they're based. Now, after that, you have an internal risk matrix that really creates a risk rating. So whether it's low or high or medium, then you proceed with your due diligence, your CDD and EDD, which is enhanced due diligence. Now, after you complete the due diligence, then you make a very sophisticated solution, whether or not you can onboard these kinds of businesses. Now, the most important aspect of after you onboard these kinds of customers is actually the fraud detection and transaction monitoring that you have in place. So we've met with some very innovative blockchain-based transaction screening companies across the world, in the US and in Singapore. So what they do effectively is they use the wallet address to screen every single transaction that's been done using that wallet address. And basically gives you an insight as to what kind of companies, businesses, or retail customers you're working with. So now we have a new trend in banking, in digital banking certainly. You're seeing a lot of fintechs coming about today that we talked about before, like Revolut, N26, Starling Bank from the UK, so on and so forth. But now these digital banks are moving away from a monoline approach. So basically what they do is they start with a current account or a prepaid card, and then they want to introduce you to more products and services such as loans, invoicing, factoring, corporate expense cards, so on and so forth. And this is really one of the biggest trends in banking today. And what that basically means is that we're creating a fintech bank, and that's exactly what we do at Arival. So basically, the next trend, the next generation bank is going to be a bank that's powered by open API technology, where this bank does not develop any products or services in-house. What that means is that there's no longer a chaotic experience for customers, because right now, as a retail customer or as a commercial customer, you're forced to navigate the banking ecosystem yourself, looking for your favorite products, your favorite services in terms of pricing, quality, UI, UX, so on and so forth. But what this means is that you're downloading all these different apps with fintechs, with different banks, creating all these new accounts, trying to pass KYC, onboarding, over and over again. Now this experience is extremely chaotic and time consuming. So what we're saying, the next generation bank is going to just partner with fintechs and integrate their products and services into one platform. So now these businesses, whether you're a blockchain startup or crypto-related businesses, so on and so forth, you have access to all your favorite banking products and services in one platform. So the next wave of banking is really going to be hitting on the point of what customers want. Customers want the bank to understand what they do day to day from a financial perspective. And based on that, they want recommendations and insights on how they can be better managing their money. So right now, banks need to understand how to listen better to their customers. And based on that, give them the insights that they need day to day. Unfortunately, only less than 1/3 of customers worldwide feel like their banks actually know them and financial goals really well. And 20% of banks believe that they have an advanced personalization technique. So it's going to be interesting how this evolves in the next 2 to 3 years. Are customers going to be more satisfied with their banks? And if not, are they going to start trending more towards those digital banks that are 100% online, branchless? The issue that they're challenged right now, that these banks don't know how to personalize the experience, is because they don't know how to leverage data. They have multi-layered systems that's very old. The infrastructure is very hard to access in terms of getting this data. And based on this data, can you actually understand what the customer wants? So I think the next wave of banking is really going to be dependent on how blockchain can reinvent the infrastructure so the data is more accessible for banks. So certainly 2019 will be one of the biggest years in terms of banks, certainly traditional banks, that they're going to start adopting blockchain internally on a pretty global perspective. Now, the essence of banking is built on something called core banking technology. 75% of the banks in the US use core banking technology that was built in the 1970s. So now what we're seeing in fintech, especially from the venture capital side of things, we're looking to invest in more innovative cloud-based core banking systems. So we've partnered with one out of San Francisco called mBank. And that's what they do, is they leverage blockchain, they leverage the cloud, and they built a core banking system that's for banks. So final thoughts. How is banking going to look like in the next few years? I think there's going to be less banks, but more financial providers. You don't see a lot of banks getting licenses on the yearly. Next, the winners of the future are going to be able to provide a customized portfolio that looks like a marketplace for customers, whether they're retail or business customers. Because at the end of the day, that's what customers want, is a customized portfolio of products that's tailored for them. Banks are going to start thinking about what GPS really means. Right now, they have a rear view mirror approach, meaning they see what happens in the background and they try to adapt on that and try to fix things as they go. Whereas GPS thinking, they're actually looking ahead. They understand how to get from point A to D and how B and C is impacted along the way. And that's really how banks are going to get better, faster, and stronger down the road. And lastly, blockchain, sooner than we know, will connect this entire life cycle in the banking process, whether it's compliance, traceability, payments, and certainly unique data storage. Thank you guys very much. If you have any questions, I'd be more than happy to answer them. And Arival Bank is here for these kinds of underserved businesses that I mentioned before, so definitely keep an eye out for us. Thank you.
Thank you, Jeremy.